trade receivables. Now what exactly is trade receivable? About liability, that I need some material, and after purchasing the material I was given a credit period of 1 month. That is, I was supposed to pay the supplier after a period of 1 month. So similarly, when the customer comes, what I will do is I will supply the particular goods to the customer and give the customer, let us say, 20 days time to make the payment in future. So from today, if suppose I am selling the goods today, from today till next 20 days, anytime the customer can come and make the payment. Till the time the customer comes and make the payment, that particular customer will be known as trade receivable or debtor. So this is another important term. In simple language, who is trade receivable or debtor? To put it in simple words, it means a customer to whom the business organization has sold goods on credit. It means the customer to whom the business organization has sold goods on credit. Simple as that. Trade payables. It means nothing but the supplier who has supplied the goods to the business organization on credit. So these are persons who has purchased the goods from the business organization, or rather the business has purchased from them. So whenever we talk about trade receivable, in simple language, they are credit customers. And whenever we talk about trade payable, in simple language, they are credit suppliers. Right? So in both these cases, that is in case of debtors, we will receive the money at some future date. And in case of trade payables, that is creditors, we will make the payment at some future date. So now as you can see, there is something called accounting equation. See students, what happens is, in any business organization, or rather in anybody's life, there is always some give and take relationship. Right? If something is received, something will be paid also. So this all forms part of business organization, and this is nothing but accounting equation. As you can see, all accounting equation will have two sides. The formula is the total of the assets of the business. Already the term is explained to you. The total of the assets of the business should always be equal to the total of capital plus liability of the business. Now, just to make you understand the accounting equation, I have taken few examples, and you can see how the accounting equation will change slowly and steadily. Alright, so let's start with the first example. Mr. A started business and opened a bank account and paid 1 lakh rupees as capital. So who is the owner of the business? Mr. A is the owner of the business. What he has done is, he has started some kind of business and he has opened a bank account in the name of business. What he has done is, he has deposited 1 lakh rupees in that particular bank account. Now the question is, to whom does this bank account belong? The bank account is registered in the name of business organization started by Mr. A. The bank account is registered in the name of business organization started by Mr. A. And second question is, who is Mr. A? Mr. A is the owner of the business. So now you can see over there on the asset side, in bank there is 1 lakh rupees and under the capital there is 1 lakh rupees. Since we have not done any transaction with the outsider, we are still not supposed to pay any amount to anybody. So the liabilities of the business is nil. Say for example, Mr. A started a business in the name of A Stores. Mr. A Stores. Alright, or Mr. A General Stores. Here you should keep two things in mind. We will always write accounts or study accounts from business point of view. So we are not supposed to remember Mr. A, but we are supposed to remember the business started by Mr. A. Mr. A does not require any accounts, but the organization, that is the business organization started by Mr. A, will require accounts. So always remember, the owner is considered to be a separate person from the business organization. I repeat, the owner is separate person from the business organization. Although the management will be handled by Mr. A, the shop will be managed by Mr. A, people will know Mr. A, but because of the business organization, so in the eyes of the law, in the eyes of other people, Mr. A will have a separate identity from his business. So here, whatever amount is contributed by Mr. A will be termed as capital, but whatever money is deposited in the bank of the business organization will be termed as asset, but not of Mr. A, but it will be asset of the business organization started by Mr. A. Right? I hope you got this point very clearly. The owner is always considered to be a separate person from the business organization. The business purchased a machine for $15,000 and paid by check. Right? So machinery is purchased. Now we already have $1 lakh in the name of business, 1 lakh rupees in the name of business. Alright, so 1 lakh rupees is deposited in the bank in the name of business. From this 1 lakh rupees, we have purchased a machinery for 15,000 rupees. So as you can see, small change is taking place on the asset side. Capital is still remaining same because that is the total amount of money which is contributed by the owner. Neither any additional amount is contributed in capital nor anything is withdrawn from capital. But look at the asset side. You can see over there, now there are two assets. First is machinery for the amount of 15,000 rupees. Second is bank, reduced by 15,000 because we made the payment from the bank balance available for the business organization. So now again let us take the total. If you consider the amount of machinery, it is 15,000. If you consider the amount of bank, it is 85,000. The total of which comes to 1 lakh. And that 1 lakh is exactly contributed by Mr. A, the owner of the business. So this both amount should always be equal. Still, the business has not taken any amount or not availed any services from outsider. So you can see the liability of the business is 0 or nil. Now let us see the third one. The business purchased goods of 10,000 rupees on credit. As you can see over here, the assets of the business has now increased. There are three assets now. Why? Number one, machinery was already there. Bank balance was already there. We have purchased some goods on credit. So there is inflow of goods of 10,000 rupees. As you can see, the machinery is still of 15,000. The inventory or the goods is 10,000. And the bank balance is still 85,000. How much is the total of the assets now? As you can see, it is 1,10,000. Now see, you can understand the difference. Out of this 1,10,000, 1 lakh was contributed by the owner Mr. A, and which is still in front of you in form of capital. Neither any additional amount is invested by Mr. A, nor he has withdrawn any amount from the capital that he has contributed. So the capital remains constant at 1 lakh. But if you look closely, the total of the asset is now 1,10,000, whereas the capital contributed is only 1 lakh. Does this match? No. So where does that additional 10,000 come from? That additional 10,000 will now become liability for the business, and the supplier who has supplied the particular goods to the business is known as trade payable, which is a liability till the time the business will make the payment to that particular trade payable. That is, till the time that 10,000 rupees is paid by the business organization to the supplier. Alright, it will be called as or termed as liability. Now if you take the total of capital plus liability, how much these two combined comes to? It is rupees 1,10,000, and from this rupees 1,10,000 we are having assets of rupees 1,10,000, out of which 10,000 belongs to the outsider from whom the material is being purchased, or rather the goods has been purchased. So the asset side total is 1,10,000 contributed by the owner 1 lakh and outsider 10,000. The business sold goods on credit at cost price of 5,000. So just there is some outflow of the goods. Somebody may have asked for the goods. So what we have done is we have provided the goods at rupees 5,000. The money we are still supposed to receive. So just look at the asset side. Machinery is still at 15,000. What about inventory? Look closely. In example 4, the inventory was 10,000, but now it is reduced to 5,000. Why do I say so? Because out of the total inventory of 10,000, 5,000 has already moved out of the business to some particular customer who has bought goods from us on credit. So that particular credit customer is termed as trade receivable in accounting. So that trade receivables are now 5,000. So machinery is 15,000. Inventory is reduced by 5,000, and since it is on credit basis, we are supposed to receive some money from the customer in future. That particular amount belongs to the business and therefore it is an asset for the business. Slowly you can see the bank amount is 85,000. Again take the total. If you take the total of the asset side, it is 15 plus 520 plus 525 plus 85. It comes to 1,10,000. Out of this 1,10,000, 1 lakh is contributed by the owner.